Alright everyone, Cowboy Trades here, welcome back to the channel for another update on Bitcoin. So, your boy's back, I'm feeling much better. There's a few updates that I want to talk about for Bitcoin and the rest of the markets. A rather significant move has happened in terms of the technicals, however, when it comes to the price action, it's more or less unchanged. I'm gonna start off on the news as we do have some extremely important stories to cover before we do hop into the TA segment. So, the stock market had a dead cat bounce back up to its daily EMA ribbons and then it nuked. This all happened within 4 days, basically since I made my last video. So number one, why did we pump? Well, the United Nations, also known as the UN, an intergovernmental organization composed of 51 countries, came out and said this. I'm gonna do my best to sound like them. Please, you gotta stop raising the interest rates. Everyone stop raising the interest rates now, you're gonna cause a recession. Which of course, the stock market loved. We rallied about 6% and we've already wiped out about 70-75% of these gains. So, what happened? Well, the Fed came out and responded and jeez, whew, this is spicy. They came back with fire. Fed's Waller responded to these UN comments with a bombardment of statements, left, right, center, smacking the balls in the face with every comment. Waller's main statements were the following. Inflation is far too high and is unlikely to fall quickly. The primary goal of monetary policy should be to combat inflation, basically meaning more interest rates. I'm also paraphrasing here, of course, but Waller basically responded to the UN saying, the markets are functioning just fine, the UN should have never commented in the first place, and yes, of course, they're not going to pivot anytime soon. Waller sees the economy continuing its weakness throughout the second half of this year, and of course, further rate hikes are expected. These last two are the fiery comments that I was talking about. Waller said monetary policy can and must be aggressively employed to reduce inflation. He also said, I'm not considering slowing or stopping rate increases due to financial stability concerns. So basically, the Fed doesn't care that your portfolio is down 90%, they want it to be down 99%. Now, the news I just gave you was by far some of the most important news we've had in months, so I don't want to dilute this news too much with any more stories, so we're going to wrap up on one final story. The Binance Smart Chain has had between 100 and 570 million stolen from it. Now, yes, I agree, that is a huge discrepancy, but multiple sources are reporting multiple figures, so there's not too much I can do with this. CNBC, however, has a more recent article coming out today, and they basically stated that Binance approximated 100 million, but approximately 2 million Binance tokens were withdrawn, which equates to about 570 million. So yeah, the maths isn't really adding up across multiple sources, but nonetheless, this is what we've got. So there we go, that's the news. I know there was a lot to digest from that, but these Fed comments are super important in understanding the Fed's position and subsequently how these changes in monetary policy are going to affect the markets. And in short, nothing's changed. They're still going to be raising the interest rates, which will more than likely cause the stock market to explode into new lows. Just look at how the stock market's been performing while they've been raising the interest rate. So once again, I say this almost every video, don't battle the Fed. But getting on to what we all care about, how does this affect Bitcoin? Well, if you've watched my last video, honestly, nothing's really changed. The last video I made, we were literally trading at around about 19,300. We're now trading at around 19,400. However, it seems like we have solidified another reversion to the mean. This reversion happened when Bitcoin pumped up to the daily EMA ribbons and solidified this rejection. If you're a fan of Fibonacci's, you can also see your 0.618 fib that we've previously talked about, 20,500 right on the dot. We pumped up to it, got rejected, and now we're moving back down. Also, the point of control was right around here at 19,900, just beneath the 20,000 target, which is also Bitcoin's previous all-time high. And you can see we're now once again trading beneath Bitcoin's all-time high. We're trading beneath the 618. We're trading beneath the EMA ribbons, beneath the point of control. It's not looking too hot. The volume as well is starting to tick in bearish on the daily. And if we switch over to the Heikin Archies, it looks like the most recent uptrend is done. I also told you in my last video that I don't think we'll pump to the top of this triangle, but if we do, I'll be shorting. I still don't think that we're going to go up to the top of this triangle round about that 21,000 region, but I will update you with my next short plan if we do go up to that area. Right now, I find it much more likely that we start losing support. The first support I see is your 786 Fibonacci. We've bounced on this on the lower time frames today. 19,300 would be a great place to wipe the floor with for that move down to about 19,000. Now, if we start putting in daily candle body closes, weekly candle body closes beneath this 19,000 level, then we would have finally lost this triangle support that we've been sitting on for so long. So I've got my eyes on that right now. Like I said, with my next trade, I'm either waiting for Bitcoin to push up to 21,000. This is a position of strength to short from. On the other side, we can break beneath 19,000. I'd personally really like to see a volume confirmed breakdown on the daily time frame, which is something that we didn't particularly have too much continuation from. I mean, yes, we had volume confirming the breakdown. The next day we came up to retest it. This is where the bearish volume was meant to continue, and it didn't. So once again, I'm looking for a volume confirmed breakdown on the daily time frame, or I'm looking for Bitcoin to start putting in weekly candle body closes beneath this 19,000 region again. If either of those scenarios happen, I will be shorting. I also told you over on Twitter that I think the daily EMA ribbons are going to boot Bitcoin to the downside of this triangle pattern. And as you can see, the EMA ribbons provided a beautiful level of resistance, with price action now just holding above the 786 Fibonacci, but trading beneath our EMA ribbons. Now we've talked about all the major things, I want to finish the video off on my final thoughts, quick firing through some charts, on-chain metrics, stock market update, my price targets, and my next trade. Let's talk about it. For the SPX, we're getting beautiful continuation, which is perfectly in line with what we've been expecting from the 2008 fractal. Once again, this does look like it's going to start having a bounce in the next couple of weeks. However, it does look like we've got a little bit more downside for the next week or two before we should be expecting a bounce. So I'm personally expecting new lows in the stock market to take place, which will hopefully finally bleed over into Bitcoin. For the DXY, it's really as simple as support, flip, resistance. If you zoom out on the DXY, you can see many times where people saw these local tops in the DXY and they start panicking and they start saying, oh, you know, the DXY is topped out, it's breaking down. But every single time this happens, we break down, we pump back up, we retest it as support, and we keep on going up. You can see resistance here. We broke down, came back to the daily EMA ribbons, broke back up. When we next came back down to it, we were flipping it as support. What happened over here? You know, this was red up until, you know, a couple of weeks ago. We were trading underneath this. This was the rejection point, around about 109. Everyone was saying, you know, the DXY is done. The top's in. You know, we're going down. We came down to the EMA ribbons, and we flipped previous resistance as support. What have we done over here? Once again, we've broken down in the past couple of days and we've retested. We didn't even come down to here. Like, this is the maddening thing. We didn't even come down to this trend line. But nonetheless, we came into the daily EMA ribbons and we flipped previous resistance as support, and we're getting a super strong buyback. In fact, the daily Fibonacci candles have started putting in a bullish engulfing candle. Regular Japanese candlesticks, yesterday they had that bullish engulfing candle. So all in all, the DXY is looking so healthy, and my next price target is all the way up here. 4.236 Fibonacci, 117. From where we are at this moment in time, this would further entail about another 5-point increase, or about another 4.5%. The same for the VIX. A lot of these charts are very similar. The name of the game is continuation. On the VIX, we've got higher lows and higher highs. We keep on bouncing up, and as you can see over here, the VIX is expected to have increased volatility still coming up until the end of the month. So the VIX is per se saying, hey, maybe these stock market indices are going to continue crashing down on the next stock market bounce. That might sound a little bit far-fetched, but nonetheless, the SPX bounced around about this time while there was still a lot of volatility for the stock market, typically being in tech stocks. Obviously, the VIX bouncing up was very bearish for tech stocks, but nonetheless, we should be getting continuation for tech stocks for the rest of the month with a bounce coming back in the next month or so after that. And then, as you can see, this pump for the VIX should entail a absolute landslide for the SPX and crypto. As you can see, the SPX, meaning the stock market, is inversely correlated to this VIX. So when we're getting prepared for this next move to the downside for the VIX in the next month, this should correlate to something like this. Stock market making new lows, bouncing back up, coming back down to retest the support over here on the trend line. As you can see, as the VIX starts to explode up, this is going to be something like this for the SPX, and then the bottom's going to be in. At least in my opinion, this is what I think is going to be playing out. I've been highlighting these type of scenarios for a while at least. Also, wow, after the Fed's comments, just look at the international government bonds. They are rocketing up. This is not good for crypto or the traditional markets. The TIP ETF is still looking in pain with lower lows and lower highs. We literally talked about this maybe 4 weeks ago, saying how the stock market, the Nasdaq, all of these tech stock market indices rather, were going to continue breaking down, with the Treasury inflationary protected securities calling for this breakdown. And once again, this is still breaking down, so I'm still expecting much more continuation over the next few weeks. The total crypto market cap, not too much to update if you're looking at regular Japanese candlesticks. It really just looks like a slow moving head and shoulders / bearish sideways chop. However, on the weekly Heikin-Ashi candles, you can still see the bleed out is absolutely in effect. And in fact, over on the Heikin-Ashis, this actually looks like a beautiful breakdown into a bear flag that we're continuing to break down from. I've actually previously highlighted this bear flag. The price target is obscene, so I'm not even going to talk about it. My personal prediction for where we're going to move down to is round about here, 500 billion. So it's very clear to me that the markets are unchanged. Bitcoin is confirming a head and shoulders breakdown with a price target of 13.5k. Bitcoin weekly Heikin-Ashi candles, just like the total crypto market cap, are still bleeding out hard. The same can be said with the monthly time frame, the 3-month time frame, the 6-month time frame, and the yearly. And just a quick update on this FOMC fractal that we've been looking at. You know, what a surprise. We talked about this being a very likely scenario. Who could have possibly guessed that we would have had a fake pump after an FOMC meeting and then break down? It's not like we haven't done this here. And also, as you can see, FOMC was here. We rallied up a bit, lower high. It is now time for curtains. It is now time for lower lows. Just a small on-chain update, whale wallets are still not accumulating. It is only retail buying right now. However, I do have to talk about these bullish signals when I do see them. The Bitcoin hash rate is absolutely exploding into new highs in the past couple of days. This is very bullish for the higher time frames. We have to distinguish between the higher time frames and the lower time frames. I've mentioned this many times before, but the Bitcoin hash rate is a lagging indicator. This can continue exploding up for months, and it is likely not going to mean anything for the price action anytime soon. However, if the Bitcoin hash rate does continue to explode into new highs, this is going to be great for the future of Bitcoin. It means the network is less centralized. It means the network is more decentralized. It means it's more secure. It has more value subsequently. Everything about the Bitcoin hash rate going up is bullish in the higher time frames. It really doesn't mean anything for the next month or so. So my friends, because of these reasons, nothing's changed for me. The charts haven't changed. We're at the exact same price as my last video, and the Fed has come out and confirmed they are still hawkish and nothing has changed. So once again, because of this, my price targets are unchanged. 17,300 in the immediate short term is what I see in play. And for the higher time frames, 15,800 is still in play. As you can see, I adjusted this a tiny bit, but as you can see, since the last video, nothing's changed. It's still about an 18% move to the downside. I'm sure some of you may have been hoping for a new chart, a new perspective, new price targets, something fresh and something new. But the cold hard facts are that nothing's changed, and I'd honestly feel like I was doing a disservice to all of you if I posted daily uploads. I would just be reiterating the same points, and if I wasn't, I'd be looking for an alternative perspective, an alternative chart, alternative trend lines with different trades. Ladies and gentlemen, I've been looking at these charts religiously for months, and the opinion that I've presented to you, that has remained same for the past week, for the past few weeks really, it's completely unchanged, and I wholeheartedly believe in it. So with that said, making these separate videos, giving you an alternative perspective on a perspective that I don't think is as likely to play out as what I've already presented, just doesn't really make any sense to me. So it is what it is. This is really all that we've got to run off right now. When Bitcoin has been trading at the same levels for months and months and months, I mean, you know, there's not too much to talk about if we're being honest. But with that being said, my next trade is still right around the corner. This is something that we can benefit from. If we do pump up once again to 21,000, I will be putting in a short. I'll talk more about my stop losses, leverage as we do. If we do come up to this level, I'll make a video on the day. And the same as if we come down to this 19,000 region. I don't think it's going to happen today. So like I said, I'm going to update you when this happens on the day, and I will put an update out very quickly with my up-to-date trade. But for now, like I've been saying for the past week or two, I have been sitting on the sidelines. The last trade we made, we had 3 trades that all walked away with a 10% profit, so that was great. I'm not looking to rush into any trades right now. I'm sitting on the sidelines looking for the next position of strength. This is what makes us successful traders. We don't need to rush into every trade. We're looking for these successful high probability trades. So that's all I've got for you today, my friends. Like I said, I'm back. I'm feeling much better. I want to wrap up the video talking about my current upload schedule. I want to be uploading minimum of 3 videos a week. I'm thinking the start, middle, and end of the week, but I do want your feedback down below. Do you think specific dates, maybe Tuesday, Thursdays, and then a random day, Saturday, Sunday, something like that? Let me know what you think of that down below. And I know some of you may be slightly disappointed in that, especially the ones who are used to the 5 daily uploads Monday to Friday, or even if you came and joined my channel 6 months ago or so when I was making 10 to 12 videos a day. Don't worry, this upload schedule is only temporary until the market makes new lows. I'm 100% coming back with these daily uploads when the time is right, basically when the markets are a little bit more interesting. But for right now, that's all I've got for you. Make sure to follow me over on Discord and on Twitter. Some of you comment on YouTube like, you know, where am I? Where have I disappeared to? But obviously, if you're only looking at my YouTube, you might be like, you know, Cowboy's disappeared off the face of the earth for a couple of days. While I'm not making videos, if I'm not posting, I'm active on Twitter. I'm sharing memes, I'm sharing charts, I'm sharing news updates and thoughts. And also on top of following me over on Twitter to get these extra updates, make sure to come and join the Discord. I'm always in the Discord looking out for comments and talking to the community. So if you do want to catch me between the videos, come join the Discord, come join the Twitter. But for now, that's all I've got for you. Cowboy out. Peace.